Hey traders, Clifford here, back with another video on trading the charts. So in the last video, we learned about what is technical analysis as well as three ways the markets can move. In today's video, we're going to learn about two very important things. One of them is price action, and the other one is a very important concept in technical analysis called support and resistance. So with that being said, let's get started. Okay, so price action. Basically, in the last video, I explained that I prefer the daily charts. Now, you can look at whatever time frame you want, but again, the daily time frame, it's going to show you about a year's worth of data, where the market is for the last year. It's the best time frame in my opinion because you see exactly where the price has gone every day in the full trading session. Each candle represents a full day of trading. But how do we actually read these candles? So basically, the way you read the candle is like this. If you go to your trade platform, you have different ways you could look at your charts. One of them is candles, the other one is bars. Let's go to bars for a minute. And what is this exactly? So basically, this is every day represents one bar, just like candles, except now we're looking at the bars. The reason I want to show you the bars is this. To understand what's happening with the price and the price action of the market, you need to understand what each candle represents. So if you see here on the left side of the bar, that's the opening price for the day. This, the one that's ticking right now, by the way, we're looking at oil, is the closing price for the day. See that little ticker right there? So you got the opening price on the left, closing price on the right. Always keep that in mind. Finally, you have the low price for the day, which is this little stick that, the bar kind of like extended down here. That's the lowest price for the day. And then finally, you have the highest price for the day, which was above the bar. Above this little stick here. It was like around here. So basically, that's how you read a bar chart. Open, high, low, close. Now let's switch it to candles. Here we go. The candle is basically the exact same thing. No need to get confused. Basically, it's still on the left side, the open, still on the right side, the close. The only difference in the candle is it's a wick, which represents the lowest price here and the highest price at the top of the wick. So all you got to remember is the same thing. Market opens here at the beginning of the candle. Market closes here. Left open, right close. Open, high, low, close. Everything's the same. The only difference with the candle is blue represents buying volume. Blue represents buying pressure for the day, buying volume. So the buyers basically are in control of this market. And then red represents selling pressure for the day or selling volume, you could say. So like here you have a bearish candle. Always remember bullish means higher prices, bearish means lower prices. So you have a bearish candle here and a bullish candle here. Like if you look at this candle here, you'll see that the price opened here and the low for the day was here, but then buyers stepped in and boom, pushed this price way up here to close here. Just remember, it's the exact same thing. Open, high, low, close. The only difference is we're looking at candles. So that's basically how you read price action. And again, each candle represents one day of trading, a full day's trading session. So now let's talk about support and resistance. Very important you understand this. This is the most important concept in trading, in my opinion, and it's what really moves the market. So basically, you want to think of support and resistance as the easiest way I could describe it is ceilings and floors. The market makes floors and it makes ceilings. It moves through ceilings to create new floors, moves through new floors to create new ceilings. So without getting too confusing, here's how it looks on the chart. So basically in the last video, we talked about a sideways moving market, which is this one right here. See how it's moving sideways, sideways, sideways. But if we look closer, we'll see that it's actually creating a floor. Where is the floor? Well, if you look close, you'll see that here is the lowest price. And then over here, the price was retested again, creating the floor. So if you take a tool, you could take one of these horizontal line tools, whichever broker you're using. I like TradingView. and you create a horizontal line right there. That creates the floor. Why? Because here the price touched this new low, then it tested it again, making it a floor. See how it couldn't break through that floor there, and then it tested it again here. So this is called support. The floor equals support. Resistance is the same thing, just the opposite. So resistance, you have a ceiling. Why is this the ceiling? Well, because basically the price touched here, but then look, it pulled back, right? And then here it touched it again, and then it pulled back, making it a ceiling or resistance. So again, support equals floor, resistance equals ceiling. And as you see, that resistance level started here, tested it here, reversed, which makes it even more significant, meaning the resistance is getting like solid now. And okay, and that's basically support and resistance. Now, eventually, markets break through support and resistance, creating, you guessed it, new ceilings, new floors, which actually happened here. So here's a narrow sideways channel. It's boring. The market's not making a new ceiling and floor. It's just kind of like consolidating, right? In a range. The market's trading in a range. But then all of a sudden, boom, right here, it breaks through that resistance level we were watching. And as you see, it broke through. Now, a lot of times when markets break through resistance, they come back and retest it. And actually, this is a really good second opportunity to pick up another position, or if you missed the first breakout, to buy at this point. So as you see it, once it tested resistance, it started moving higher. Now, but then what happened? Well, then it created a new resistance level here and a new support level here. I'm not sure if you can see that, but like you see how now there's a new floor and a new resistance. Then again, boom, breaks through resistance. And then what does it do? It retests resistance again. And by the way, when it retests resistance, it actually becomes support because now it's a new floor. So it broke the resistance, came back to retest it here. And then what did it do? It created a new resistance level here and a new support level here. And this is basically how the market moves all the time. Support and resistance, ceilings and floors, breaks through resistance, right? And then, and that now a really good time to buy is when the market breaks resistance or when it comes back to retest resistance. That's another time you can buy. If you're looking to sell, you want to watch support. Obviously, if the market breaks through like support, that's a bearish signal, so you want to be a seller. If the market breaks through resistance, you want to be a buyer. The market breaks through support, you want to be a seller. And then look, here's another resistance level, and here's another support level. And as you see, look what happens. We get a little consolidation. I don't trade consolidating markets because, I mean, how are you going to make money? The market's not going anywhere. It's not moving. It's just kind of like nothing. It's just consolidating. You got to wait for the breakout. But when it breaks, like it did here, that's when you want to jump on uh, basically the money train because as you see, so basically what this means, this consolidation, it means that supply and demand has reached a point of kind of like unison, like, there's not too much supply, there's not too much demand. This is oil, so I'm guessing what happened in the world when this thing broke out is a large demand entered the oil market, causing this consolidation to break. And look, it broke above, and then it went higher and higher and higher. And what did it do? Created a new resistance level here, new support level here, and so on and so on and so on. Let's look at one other market. Gold, real quick. Let's pull up this gold thing here. So looking at this chart, tell me if you could see the support or resistance level. If you want to pause the video, go on ahead and pause it. If not, I'm gonna move on and show you. Looking at this chart, and again, daily chart, I see support right here, and you could see it clearly. Market touched this level, couldn't break through, came back up, retested the same floor, the same support, and basically couldn't break through. So there's your support there. Now resistance, on the other hand, again, let's draw another line. I notice is up here, right? I mean, look, that's the ceiling. And as you see, resistance, support, floor, ceiling. But eventually, boom, buying opportunity, break out of resistance. So we go long. We want to go long if we're a buyer, and we want to go short if we're a seller. So we go long, we buy here, and then look what happens. The market comes back, tests our resistance level, making it once again the new support level. And you could have been a buyer again right here because these levels are significant. When they test them, that's a great time to get on board the money train if you missed it the first time, or like I said, if you were late the first time, this is a great second entry. Or if you bought one here, you might even want to buy a second one here because why not? You're going to make a larger profit than before. So that's about it for support and resistance. Very basic concepts. I hope this video was helpful to those who are new to support and resistance and price action trading. Again, you don't need any indicators for this type of style of trading. You just look at the charts and you trade what you see. And I think it's the best way to trade. So if you like this video, feel free to like, subscribe, put your comments below. And in the next video, we're going to learn about a very important tool that I love in trading called Fibonacci. So I look forward to seeing you guys in the next video. And thanks again for watching. As always, my friends, trade what you see on the charts, trade well.